Hey everyone, welcome back to Corporate Decoder. Today we're diving into a company facing a little turbulence. Let's just say they might be having a harder time merging than two cats in a cardboard box. We're looking at a report filed March 6, 2025 by SURMODICS, a company that focuses on medical devices. Specifically, this report is about a potential merger that has hit a major snag. SURMODICS is based out of Minnesota and makes different kinds of surface and drug delivery solutions, primarily for medical devices. Back in May of 2024, SURMODICS agreed to be acquired by a company indirectly controlled by GTCR, a private equity firm. GTCR would buy SURMODICS through a newly formed company called BCE Parent. It sounds like a standard merger, with SURMODICS becoming a wholly owned subsidiary, meaning it is owned fully by its parent company of BCE Parent. Now here's where the story gets interesting. On March 6, 2025, the Federal Trade Commission, or FTC, stepped in. They filed a complaint to block the merger. Basically, the FTC is saying, hold on, this deal might not be good for competition. They went to court to try and stop the merger from happening. This is what is called an action. SURMODICS reacted quickly, issuing a press release, which is just a statement to the public about the FTC's action. We'll see exactly what they said shortly. It is important to know that because this information about the FTC action and the press release is reported in something called a Form 8K, it means that the company is reacting to a major event that could be of interest to investors. This form is not like a financial report, it is just to inform investors of things as they are happening. The company then added a very important note called forward-looking statements. This is a heads up that everything they say about the future, especially regarding the merger and the lawsuit with the FTC, might not actually happen. There are many risks and things could change. Some of the specific risks mentioned are that SURMODICS might not win the lawsuit against the FTC, or that the merger might not happen at all, or that GTCR's financing might fall through. There's even a risk that SURMODICS might have a hard time enforcing the deal if GTCR backs out, because of limitations described in the agreement of merger. It sounds like the merger agreement, which is the contract explaining the merger, has very specific limitations in case something goes wrong with it. They also mentioned that if the merger is cancelled, SURMODICS' stock price could fall, or they might even have to pay GTCR a fee. These are just some of the consequences. It may also create an effect on the existing business and operations. According to the report, the merger agreement also limits what SURMODICS can do with its own business. For example, they might not be able to return capital to shareholders or explore other deals. This could create uncertainty and make it difficult to plan for the future. The company also cautions about the cost of the litigation with the FTC and other legal proceedings. Litigation, or the process of taking legal action, can be very expensive, time-consuming, and full of uncertainty. SURMODICS directs readers to their previous annual report, the Form 10K, for the fiscal year ended September 30, 2024, for a more detailed list of risks. This is just a reminder that there are always risks involved in any business, and investors should be aware of them. Finally, we have the press release itself. A press release is when companies make statements to the public to better control the narrative. So, what does this all mean for SURMODICS? Well, the FTC's challenge throws a major wrench into their plans. The company now faces a potentially lengthy and costly legal battle, and the outcome is far from certain. The merger, which seemed like a done deal, is now hanging in the balance. The document closes with a signature, which is important for accountability. Now, let's take a step back and look at the bigger picture. What does this FTC challenge tell us about SURMODICS, GTCR, and the medical device industry as a whole? The fact that the FTC is stepping in suggests that they have concerns about the level of competition in the market. They believe that this merger could create an unfair advantage for the combined company, potentially harming consumers through higher prices or reduced innovation. For SURMODICS, this is a setback. The company was likely hoping to be acquired by GTCR and become part of a larger organization. Now, they face uncertainty and the possibility of having to continue operating as an independent company. For GTCR, this is also a challenge. They had identified SURMODICS as a strategic acquisition, and now they have to fight to make the deal happen. They'll need to convince the court that the merger is not anti-competitive and that it will benefit consumers. Overall, this situation highlights the increasing scrutiny that mergers and acquisitions are facing from regulators. The FTC and other agencies are paying close attention to deals that could reduce competition, and they're willing to take action to protect consumers. As for SURMODICS, the company's future is now uncertain. They'll need to navigate this legal challenge carefully and be prepared to continue operating as an independent company if the merger falls through. Looking at SURMODICS' current situation, they are going to need to play this as carefully as possible. The company needs to reassure investors, employees, and customers that they have a plan regardless of the outcome of the FTC case. The risks that the report has clearly states makes the future less clear. They need to be careful on how they deal with the situation. Thanks for watching. If you found this breakdown helpful, please give us a like, leave a comment, and subscribe for more corporate deep dives. Until next time, stay informed.